The US Geological Survey added silver to its critical minerals list this week. As we've been telling you for years here, it's confirmed silver is also vital to America's economy and national security. Silver, along with other major precious metals such as platinum and palladium, are all deemed essential by the USA. Silver's inclusion has been a concern for precious metals traders and manufacturers that rely on the material for growing industrial inputs. Look, silver goes into electronic circuits, batteries, solar panels, antibacterial medicines, inputs second only to oil, as well increasingly into store value investment demand ongoing. Any tariffs on silver could wreak havoc on the metals markets because the US relies heavily on imports to meet domestic demands. Remember, we on average import like 5 times the amounts of silver we internally mine to meet our ongoing silver demands internally here in the domestic United States. This news this week acknowledges silver's vulnerable supply chain real time. It could lead to enhanced government focus on securing domestic supply chains, support for enhancing permitting and mining and refining, subsidies, and strategic stockpiling initiatives for said metals. Someone better inform the COMEX silver registered pile to stop shipping off domestic silver supplies and stockpiles for paltry sums of short-term profit taking, given higher London lease rates of late. Just a quick eyeball suggests that over 50 million ounces of silver have left COMEX's combined eligible and registered silver stockpiles this past London Silver Squeeze month of October 2025. Our friend Bruce over in Japan points out lease rates for all 3 critical precious metals we just mentioned, silver, platinum, and palladium, have all been spiking in London, signaling local shortages of bullion float to lend to end users over there this fall. Bruce also recently posted updated Chinese platinum import volumes through September of this year, 2025, which totals to about 40% of world year production already off to China through the first 3 quarters of this year, 2025. Keep it up, it'll be 55%. Again, platinum is a critical mineral we need here in the United States as well. Given the large drawbacks from Chinese silver warehouses of late, it's not surprising to see the news and reports that China is now considering limiting silver export rights in 2026 and 2027. Good luck, India, and good luck, London, if that does happen. Turning back to London, which saw such a drawdown of their silver float last month, that lease rates had to spike as high as 40% intraday and 200% overnight, according to reports of their opaque, non-public data. According to the LBMA's latest silver inventory update, they pulled some 53.8 million ounces into its thin float market recently this past month. Of course, buying some time, at least for now, and allowing the silver market to settle down of late. One major issue remains. More people and investors around the world learned and now know that silver demand is outstripping silver supply to the tune of market deficits now near 5 years running, around 800 million ounces guesstimates, with no forecasted end in sight. So this trade is still simple for myself. Spot prices must rise, or else we're going to keep seeing lease rates blow out and random shortages in various pockets throughout the bullion-consuming world again and again. Let's hear what other precious metals commentators had to say this week. We're going to start with the over-levered futures and options trading crowd, and then work our way back into physical reality with precious metals commentators that I respect.
In April 2025, the gold to silver ratio surged to nearly 105, meaning it took 105 ounces of silver to buy 1 ounce of gold. That level was surpassed only once in the past 50 years, and that was during the market panic in early 2020. Now, in periods of market stress, gold often moves higher first, leaving silver behind, and that's exactly what happened this year. But the catch-up has been remarkable. Silver's jumped 65% in just 5 months, pulling the ratio back to 79, which is much closer to the long-term average. A key question now is, did something materially change in silver's fundamentals, or was it simply a stretched ratio snapping back as traders sought new ways to profit from the ongoing debt and currency debasement trade? Realistically, it's more likely the latter, but there's still a growing view that silver's role in electrification will make it increasingly valuable, especially as power demands rise from next-generation technologies like artificial intelligence, quantum computing, and crypto mining.
Wrong conclusion. It's about the physical fundamentals, finally. Let's move on.
Another signal comes from the parallel rallies in platinum and palladium. While both metals play minor roles in electrification, they're essentially a catalytic converter and hydrogen cell fuel technology. Their strength suggests silver's surge may be part of a broader expansion of the gold safety trade, driven by concerns over global trade, and accelerating fiscal spending that continues to worry investors.
Someone I often listen to and respect, for he's often proven correct. Well, at least not in this case, but CPM Group's Jeffrey Christian went on CNBC India this week and dropped some average gold quarterly price bombs for 2026, which jive a lot with what many major commercial bank desks have been saying. Also fun at the end of the interview, he somehow forgot what CPM's quarterly average silver guess is for next year, 2026. He does begin with interesting points that are true about how the ongoing U.S. government shutdown is potentially hurling us toward a recession and ruining our reputation further around the world. Have a look and listen.
So we already had a tenuous economic outlook, and we were tilting toward a recession. The lockdown doesn't help on a short-term basis and sort of helps push us toward that recession. But in addition to that, on a long-term basis, it severely reduces the credibility of the U.S. government and increases the uncertainties and anxieties that investors and corporations and consumers have around the world. And that will reduce economic activity, not just in the United States, but globally as well, because people are very much concerned about the stability and the direction of the U.S. government.
There are just so many factors, Jeffrey, that are at play right now. So looking at all of these, what is your sense on where is the gold price is going to end this year and a potential price range then for next year?
We wouldn't be surprised to see $4,500 by the end of this year, possibly somewhat higher. At some point in 2026, we're expecting that the quarterly average price may average $5,000. When we think about when we make our price projections, we have short-term price projections, which are intraday, or this is where we think the price will be this month. But then when we start going longer term, we look at quarterly price projections out over the next 2 years. And then once we go beyond 2 years, we look at annual price projections. And so from a perspective of where we think the price of gold will be in 2026, we wouldn't be surprised to see the price approaching $5,000 on average. And you have to understand that average, and right now the price, we've gone through 10 months of 2025, and the average price is something like $3,600. So people will say, well, the gold price was $4,400 this year. Yeah, for a day or 2 days, actually. But, the average is much lower. So if we're saying that we think that the price could approach $5,000 on average next year, that suggests a range that has the gold price going significantly higher than $5,000.
Jeffrey, before I let you go, I have to get in the silver price estimate going forward as well. That has been quite volatile. Do you see 50 come back in the next year?
I think that the silver price is going to stay high for the rest of this year, the last 2 months of this year, and probably move higher next year. I'm not quite sure what our average price is that we're projecting for 2026 in our various reports. But, we've seen the silver price move as high as almost to $54. It's come back off. It was trading around 48 something before we got onto this call. And our expectation is that while the silver price will continue to be volatile, and we wouldn't be surprised to see a spike sharply lower at some point on a short-term basis, on a long-term basis, we do see fabrication demand relatively high. Refineries are backed up with scrap, old silver investment products that have been sold to take advantage of these high prices. That's going to work through the market, and that will increase the supply over the next 2 months, 4 months, and that could weigh a little bit on silver prices. But again, the major factor determining silver prices, like gold, as with gold, is investment demand. And investment demand is driven partly by expectations of tight silver supplies, but it's more importantly influenced by investors looking at the state of the world, the state of their own local financial banking system stability, the state of their own economy, the state of political security. And all of those factors are unsettling investors right now. We've seen a very sharp increase in investment demand for silver this year, last year, this year, and we expect a further sharp increase next year. So we're expecting silver prices to rise. I assume that as I said, I'd have to look at my reports to see what our most recent projection for the average prices next year, but I assume it's well over $50 an ounce.
Well, let me assume the gold price does average $5,000 per quarter next year, like Jeff and CPM guesstimate. Well, if the spot gold silver ratio somehow just stays around 80, well, that suggests spot silver in the 60s per ounce next year, 2026. Well, I certainly think these early year guesses at how much silver investment demand there would be in the US and India, they're going to be proven too low when the data adjusts rolling forward to come in 2026. But I want to turn to the biggest silver bull of 2025, who has been proven most accurate in his early takes that silver would bust $50 an ounce this year. Mr. Michael Oliver, a man who's traded gold and silver futures since the middle 1970s. Well, he's going to infer much of what we all do here often. The world silver price has been systemically suppressed, but its shackles are coming undone in ongoing rolling physical supply shortage around the world. That's how markets work, by the way. You rig a price too low for far too long, eventually shortages and gray markets form, and then screaming re-rating price points climb higher. Have a listen to what Mr. Oliver had to say about gold and silver this week.
We've done a lot of technical rationale for that. It's not just a gut feeling, okay? But we've shown that if you look at silver on a chart, just an arithmetic chart, go back to 1975 when gold was legalized. Gold has had huge surge up, then a pullback and a range for a decade. Then another huge surge up and a new higher range for a decade plus. And now is into another surge, which is, by the way, only half as strong so far, measured logarithmic scale, ratio scale, to the prior two bull markets. If gold matched them, it'd be $8,500. Okay. But how come silver is stuck in this box for 50 years?
Good question, Mr. Oliver. Now drop that smoking hot silver forecast, 2026.
My view of the 60-70 range is gone. I no longer have that view. I now think you could go to 100 to 200 in the next couple quarters.
All right, you get the idea. We're probably looking at back-to-back smoking years for physical precious metals performances in price terms. I'm going to go make a coffee, and we'll be right back after this brief introduction. You're not going to want to miss this ending Fiat Federal Reserve balance sheet admission and what it portends for gold and the related precious metals as we move forward through this decade into next. Thank you for coming here. Stick around. You're not going to want to miss that. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates, and be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Looking to stack silver or start your precious metals journey? There's no better place than SD Bullion. Trusted by hundreds of thousands and rated A+ by the Better Business Bureau. Only at SD Bullion will you find the exclusive Scottsdale Mint Eagle Stacker Silver Round, a high-quality precision stack design available in 1 ounce, 2 ounce, and 5 ounce sizes. Enjoy competitive pricing, fast shipping, and secure storage options for your gold and silver. Stack smarter, stack with confidence. Visit sdbullion.com/stacker, where America buys gold and silver.
The spot silver price traded a touch down, and the spot gold price traded flat on the week. The spot silver price closed at $48.24 an ounce bid, and the spot gold price ended this week trading at $4,018 an ounce bid price. The spot gold silver ratio climbed slightly on gold strength versus silver this week, effectively closing an 83-ounce spot silver to afford 1 ounce of spot gold. Anyone looking to add to physical precious metals positions out there are still great deals on constitutional 90% US silver coinage, slabbed constitutional double eagle gold coins, and low premiums on 1 ounce Royal Canadian Mint gold coins this weekend at SD Bullion. Visit www.sdbullion.com/deals for these offers and more. Also, be ready for an exclusive Royal Canadian Mint and SD Bullion product drop this coming Monday, November 10th, 2025. I personally will have some cash laid aside ready to grab a few for myself, for I was fortunate enough to have already seen them in person, and I'm getting some. They are, as the kids might say, silver bullion fire.
Have you guys imagined a world where gold's worth $10,000 an ounce? How many producers are going to even exist? Because I have.
If I'm an investor and I have $1 million portfolio and I want 20% in gold, I don't think about ounces, I think about dollars. And so if the price goes up, you're buying fewer ounces.
What we've been hearing for a while is there's competition between industrial use and investment use, right? So I think that's where the push and pull is going to be coming from.
Last year when you guys came to visit us, we said, hey, what's the status of us working together directly? And if you guys are in, we're in.
Right.
That got us an invite to our first RCM summit. We've heard about this thing. We got 1 hour with them. What are we going to pitch them? We went in there. We did the meeting. And
shut down. In the most Canadian way, it was like we appreciate your interest. And I was like, I think that's a no for us.
That's a no. Yeah. Eventually, we got there, right? I think at the LBMA last year, we met for breakfast, and you said, I got good news.
Some central bank gold bullion data continues trickling in for September. The leading gold tonnage buyer for the month of September was the B in BRICS, the nation of Brazil. And for the month of October, it seems growing gold balance sheet powerhouse European Poland is buying bullion yet again in size. The USA's exploding debt levels reached $37 trillion last June 2025, and now $38.1 trillion, updated yesterday on the Debt to Penny website. At this rate, by the time Trump's next 3 years unfold, we'll be looking at around $45 trillion hard debt levels or higher. Hey, if we have a recession, let's go ahead and blow beyond 47 for the numerology fun. On a more sobering and serious note, the Fiat Federal Reserve is already trial ballooning headlines that they're going to need to begin expanding their balance sheet for liquidity needs. That's also known as the market will freeze up and fail if they don't. Same old infinite QE robbed the Treasury lines incoming. And so, if the next round of balance sheet expansion is anything like the last, we're looking at a doubling and more from the near $6.6 trillion level their balance sheet sits at currently. In probably the most ridiculous gold bullish headline, and then following chart to close this week, is this. The US gold reserves with $4,000 an ounce gold spot price is currently valued at just over 1 trillion fiat dollars at the moment. If you take their word for it, don't expect an audit ever. A still historically low level with a mere 16% coverage of the current Fiat Federal Reserve's balance sheet, again set to expand further to come if you believe those headlines. Look back to 2007 and then more importantly 1972 to get a sense of how far this ratio could rise through this decade into next. If we somehow rhyme in time with past Western world-driven gold bullion bull markets like 1980, we're talking many multiples still to come for the gold price from here to eventually way up there. You're going to want to own bullion physically in aggressive size, in other words. That will be all for this week's Bullion Market Update. As always to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new Bullion Market Updates.